Hello and welcome to Trending Daily. Today we are looking at a major development in Pakistan's economic story as the country reports a strengthening external account position, a return to current account surplus, and rising signs of broader economic growth momentum across key sectors of the economy. The latest data shows a marked improvement in foreign inflows, trade balance dynamics, and overall macroeconomic stability. Pakistan is also showing stronger economic growth signals as multiple indicators point toward gradual recovery, improved investor confidence, and expanding economic activity. According to the State Bank of Pakistan (SBP), Pakistan recorded a current account surplus of $459 million in May 2026. This comes after a deficit of $276 million in April. The shift highlights a continued improvement in the country's external sector performance as the new fiscal period progresses. The surplus is also significantly higher compared to the deficit of $44 million recorded in May last year. More importantly, the cumulative position for the first 11 months of fiscal year 2025 to 26 has now moved into surplus territory. Data from the State Bank of Pakistan shows that Pakistan posted a surplus of around $255 million during July to May period of fiscal year 2025 to 26. This is a sharp reversal from a deficit of $1.62 billion recorded in the same period a year earlier. Officials say this improvement reflects better control over imports, stronger remittance inflows, and relatively stable export performance. Workers' remittances have remained a key pillar supporting the external account, while import demand has stayed contained due to policy measures and macroeconomic adjustments. Alongside external stability, Pakistan is also witnessing signs of stronger economic growth momentum. Business activity is improving in selected sectors, financial markets, and is rising, and investor sentiment is gradually turning positive. The current account is a critical measure of a country's economic health. It tracks the flow of goods, services, and transfers between Pakistan and the rest of the world. When the balance moves into surplus, it generally signals reduced pressure on foreign exchange reserves and greater stability for the local currency. Pakistan has been working under an International Monetary Fund supported program after facing severe balance of payments pressure in 2023. Since then, the focus has been on stabilizing external accounts, rebuilding reserves, and restoring investor confidence. Government advisors have described the recent surplus trend as a positive signal for a long-term economic stability. One senior advisor to the Finance Ministry said the strong external account is the foundation of sustainable high economic growth and highlighted that this is the fourth surplus recorded in the past 5 months. In a separate media interaction, a senior government official described the current economic phase as a proud moment for the country and a positive sign for global economic engagement. He pointed to improvements in multiple indicators and said that the outgoing fiscal year had ended on a stronger trajectory than expected. He also highlighted revised growth expectations, placing estimates between 3.4% and 3.7% for the current year, with a target of 4% for the next fiscal cycle. According to him, economic momentum is gradually improving as fiscal discipline and structural reforms begin to show results. The official noted that inflation remains in double-digit levels, which has influenced monetary policy decisions. He referred to an increase in policy rates from 10.5% to 11.5% as part of efforts to manage price stability and macroeconomic risks. Another key highlight from his remarks was growing investor interest in capital markets. He said there were 11 initial public offerings during the year, which he viewed as a sign of improving market confidence and expanding private sector participation in the economy. He stressed that local investors must take the lead in driving growth and compared current trends with earlier privatization efforts. The government is also considering further privatization of distribution companies and attracting foreign investment from multiple regions, including China, the United States, and Gulf countries. Sectors such as minerals, mining, agriculture, and information technology were identified as the key areas for future investment. Officials believe these sectors can play a major role in boosting exports and creating employment opportunities. On taxation reforms, the official highlighted steps taken to reduce corporate burden. He said the super tax has been abolished in the 6th slab and reduced in another slab from 10% to 8%. The fixed tax regime for the IT sector has been maintained to support export growth and digital services expansion. Special focus has also been placed on small and medium enterprises and agriculture sectors. In construction-related policies, the government has reduced transaction taxes with the aim of increasing activity in the real economy rather than speculative investment. A rise in petroleum levy was also acknowledged. Officials justified the increase by pointing to national security requirements and the need for additional fiscal space given the country security environment and defense commitments. The government also expressed optimism about the future trade opportunities, particularly with neighboring countries. One major area of interest is potential trade expansion with Iran, depending on the easing of international sanctions and developments of secure financial settlement mechanisms. Officials indicated that Pakistan is closely monitoring developments regarding international negotiations and sanction decisions. They emphasized that any improvement in the situation could open new opportunities for exporters, especially in energy, agriculture, and trade services. The finance minister also highlighted expectations for the information technology sector, projecting exports to reach $4.5 billion. He said the government is working to build a supportive ecosystem for young entrepreneurs, freelancers, and technology-based businesses. In addition, he pointed to long-term reforms aimed at improving structural efficiency, expanding exports, and strengthening fiscal space. He indicated that once sufficient fiscal space is created, certain temporary tax measures could be rolled back. The broader message from policymakers is that Pakistan is entering a phase of cautious economic recovery, supported by external account stability, fiscal reforms, and gradual investor confidence, along with strengthening growth momentum. However, experts also caution that sustaining this momentum will require consistent policy direction, continued export growth, and further improvements in productivity across key sectors of the economy. For now, the latest current account surplus offers an important signal. It suggests that Pakistan's external vulnerabilities are easing and that the economy may be moving toward a more stable and balanced position after years of pressure. This has been a detailed update on Pakistan's current account performance and economic outlook. See you in the next episode.